Hey everybody, how you doing? Tom Willard here with Tom Willard Trading, doing the next part of this technical analysis course series. Going to be talking about some more macro type patterns: head and shoulders, double tops, double bottoms, cups and handles. So I'm going to show you a few examples here, and you can look at this. And this ties in a lot to the other video, the retracement video I did. Those patterns you can find; those are more micro patterns, flags, geometric type, pennants, things like that, as well as pullbacks, retracements, and of course breakouts you can find within these more macro patterns. So what you're trying to do is ultimately just observing and seeing if you can find multiple patterns that align, that come at the same time. And what happens is people that follow those patterns, it becomes a self-fulfilling prophecy. They're actionable events. That is, a pattern sets up and people think, okay, well, this pattern setting up has given me an edge, and enough people think that, then it creates what? Demand or supply if they're on the sell side. And what moves prices? An imbalance of demand and supply. Okay, and it's pretty simple. That's why a lot of these things work. Now, whether they follow through or not, that's what you got to watch for, because typically if people are watching certain patterns, right, there's an action point, and then you're taught, typically, if you work with me anyway, not to chase. So then the question becomes, well, who are these people that continue to supply the supply or supply the demand to continue to make prices go? Because the bottom line is, for you to make money, you're relying on other traders in the world to come in and pay worse prices than you did. And that's all there is to it. Okay, you can't force that. They've got to come in on their own volition and make those choices. Now, this is the 5-minute chart of the Qs. Now, this is interesting because a lot of people show you, your classic top heads and shoulders tops. I'm going to do something different here. I'm going to show you something different that you may not see as often elsewhere. I'm going to kind of cut from the normal, but you'll see here the 5-minute chart of the Qs. It may not look remarkable. You see we've had a couple of downward days here. This is the 10th of October, and I'm filming this on the 11th. Now, let me watch this when I do this. I'm just going to draw it in so we just see the one day. Now, you'll see here, okay, that we have a little head and shoulders pattern, okay? It's right here, okay? The thing came down, it came up, formed a high, made a higher low, made a higher high, the head came down, made a lower high, and then it broke the neckline right here, which is actually a little breakdown pattern too, see part 1, okay? And another one here, right, where you got your, you got paid in full if you nailed this and saw this. So you coupled the head and shoulders, the intraday head and shoulders pattern with a neckline break and a breakdown, and boom, right into the close. Okay, beautiful, beautiful. So there's an example of an intraday head and shoulders. Now again, these patterns that I'm teaching you apply to all time frames. Okay, but there's an absolutely exquisite example of a head and shoulders. Most people think these have to be at absolute extreme highs. They don't. The concept still is pertinent. Okay, and then you couple those with a tighter entry off of a breakdown pattern, you got a good reward for risk. Ride or down. Beautiful. Now the SPYs also gave a head and shoulders. Now this one's not as evident because of the relative strength. Notice the strength here, see part 2 video, okay, that it had compared to the Qs. Here's the Qs. See, notice this, higher high than, it didn't quite, it made it pretty much an equal low here. Now look at the SPYs. It actually tried to establish an uptrend again, and then it collapsed. But you'll notice here, shoulder, head, shoulder. Okay, they can get their gangster lean on to the left or right. This one's got it to the left. We're looking at it from here. Okay, from his perspective, it's to the right. But anyway, here's your neckline. There's your break point there, or here you could short it. Okay, gorgeous. And then trade management down. I'll do another video on trade management later. I know people are just jonesing for that one. It'll come. Okay, so head and shoulders intraday, SPYs, Qs. You see examples right there from just yesterday's trading. Okay, now I want to move to a double top. And, these are not, it's not rocket science, okay? Basically, you've got a couple of tops here. This is the weekly chart of ExxonMobil where it topped out again, and there's your double top. In a sense, you could say triple top because this one's not, these are definitely higher than this, and you're never going to get, typically not going to get, and I can't say never, an exact high to the penny. Okay, for your double tops, and you can't say, well, if it's not an exact penny, then it's not a double top. No, it's got to be in the hood. Okay, so here you see high, double top on the daily chart, and down she came. Really, it didn't give it a chance. It gapped down on this day, and really it would have been hard to nab this on the daily chart. Okay, because once it's down here and you're shorting it here, and you're saying, okay, it's going down, and in this particular case you would be right. Okay. The problem is your risk. Where are you going to put your stop, right? At this point, it's so far gone from the highs here that you got to put a big stop in. Then you've got to make it move triple that, and the odds of it doing that, unless you plan on holding it for a long time, is lower, the chances of that happening. So again, you have to make those decisions on your own based on your trading plan and your um, appetite for risk and your time frames, of course. Okay, but an example of a double top there. Now Chevron, which is in the same group, let's just see if it did the same thing. Yeah, I mean you see a slightly higher high, okay, and then it came down here pretty hard. You'll see here, look at this. This is like in a sense, a quadruple top that came down hard, took out all the lows, right, turned right around and went up. Okay, an example. This is why, like on the last example, I said you don't want to chase those things. Okay, you may look in hindsight and say, oh, it's no brainer. This big red bar, right, it's going to go down. Not necessarily so. Okay, I mean, holy crap, look at the spies on the weekly charts, right? We've had big moves down in high volume before, guys. We've had it. And then we could continue to every single time up to this point, gone back and gone higher. Look at the Qs, same thing, right? That's a vicious move down on volume, vicious move down on volume. Okay, not so much there. This is hardcore right here. Okay? This is basically what we're going through right now. Okay? And so, I've heard the people calling doomsday here and here and here and here, and they've been eating crow. Now, as this thing gets more long in the tooth, I mean, good Lord, we're going on, what, 5-6 years now of general uptrend. One of these, it's gonna happen. It's gonna come down a lot more significantly. Okay, so you just have to be prepared and don't act like a newbie, and start chasing stuff. Wait for your steps, wait for your edge. You may not get one. You may have to sit one out. You may have to wait, but that's part of the game, in my opinion, to doing this game well. Okay, so we talked about head and shoulders. We talked about double tops. Now, inverse double bottoms. You got a double bottom here, right? Here, retrace to here, and then goes back up. Spies, you don't really have a double bottom. You got higher lows, so it's basically just been trending higher. It hasn't even retraced 100%. I guess here it took it out. Okay, but in general, that's the head and shoulders. You can have inverse head and shoulders and double bottoms as well as double tops. Now, the last one I want to show you is a cup and handle. Let's just kind of show you that there. And again, this applies to all time frames. Okay, here it is. Here's the cup. Here's the weekly of Guild. It came down here pretty viciously, mind you, right? Taking out a lot of stuff on volume. Came right back up. And now look at this. There's your cup. Okay, and look at the handle. Beautiful. I mean, I look at this thing and I just start salivating. It's absolutely gorgeous. Okay, look at the volume drop off. So the cup and handle, you want to see volume can be high on the way down. You want it to kind of come back up in decent volume too, which this did. But you want the handle to have low volume, ideally. That's what you want. You want to kind of sit there, bring in shorts. People are going, oh, hey, double top. We're going to go lower. And it draws them in, okay, the short. And also it just kind of dries up on the volume. So it shows a lack of interest to buy or sell. And the fact that it's holding a price range means that, if sellers came in and there's no one there to buy, it would drive prices back down. But if it's holding and there's not a lot of volume after a move up, typically it's meaning it's just complacency. And what it's doing is consolidating, possibly for another move. Now, nothing's 100%. Okay, buy the high here, the handle, stop the low, and it's payday. That's a cup and handle. Okay, and you can get inverse cup and handles too to the downside. Okay, I'm just showing you a few examples. Again, these apply. Obviously, you have my email. Contact me if you have any questions. I'm here to help. Tom@TomWillardTrading.com. Hope you enjoyed this video, and I'll see you in the next one.